Today, major digital currencies close out the week in the red. Crypto company SafeMoon files for Chapter 7 bankruptcy, and Fireblocks chief legal officer discusses where he thinks crypto regulation is headed in the US in the near future. Welcome to CNBC's Crypto World. I'm Kate Rooney. Major cryptocurrencies are back in the red this morning. As of noon Eastern, Bitcoin and Ether both fell about 2%, with Bitcoin back below $42,000 and Ether trading above $2,200. Solana, however, rose more than 0.5%. And for the week, both Bitcoin and Ether slid about 5%, while on Wall Street, the S&P 500 gained more than 2.5%. All right, let's talk about some of the top stories. DeFi protocol SafeMoon filed for Chapter 7 bankruptcy as its executives face criminal charges here in the US, according to a court filing yesterday. The DeFi protocol has between 50 and 99 creditors, anywhere between $10 million and $50 million in assets, and owes between $100,000 and $500,000. Chapter 7 bankruptcies result in a debtor's assets being liquidated to repay creditors, and unlike Chapter 11 bankruptcies, there's usually no intention of restructuring and relaunching a company. SafeMoon's founder and two top executives were charged by the DOJ and the SEC last month for allegedly running a, quote, massive multi-million-dollar international fraud scheme. Next, the SEC just responded to Coinbase's request for new crypto rules with a resounding no. Back in 2022, Coinbase petitioned the SEC to craft bespoke rules for the industry and even asked federal courts to compel the agency's response. Well, today, the SEC issued its denial, saying, quote, the existing securities regime is good enough to cover crypto assets deemed securities. It also disagreed with the notion that those existing rules were unworkable for the digital asset space. That response from the agency isn't exactly a new one. Chair Gensler has argued many times that existing SEC rules are enough to govern cryptocurrencies. At the same time, the SEC joined a bunch of other U.S. financial regulators asking Congress to pass new laws governing crypto assets not deemed securities. The Financial Stability Oversight Council released its annual report for 2023 on Thursday. It found that volatility, high use of leverage, and interconnectedness with the financial industry are just some of the risks for digital assets out there. The council said it would continue its own enforcement actions on crypto's bad actors while asking Congress to pass new rules for stablecoins and spot markets. All right, sticking with regulation for our main story, Crypto World's Talia Kaplan sat down with Jason Allegrante, the Chief Legal and Compliance Officer at Fireblocks, to discuss regulatory advancements in crypto in the U.S. over the past year and how they compare to developments around the world.
It has been quite a year for crypto, full of notable events, including the high-profile trial of Sam Bankman-Fried, enforcement actions against the world's largest crypto exchange, Binance, and we're starting to see a comeback for crypto prices. But of course, this comes after a year of scandals and bankruptcies, including Voyager, Celsius, BlockFi, and of course, FTX. Now, you recently argued that despite those large implosions involving crypto last year, we are now on the verge of a turning point in crypto's journey for mass adoption. Why do you feel that way?
It's been safe to say that it's been a turbulent period for crypto, and more so than usual. And I think what's really struck me are incidents like what happened with FTX, where we have fraud in the space. And so I have been searching for a parallel, trying to understand this historical moment in the crypto markets, where we might be headed and what the catalysts for change in the crypto markets might look like. I'm a financial services lawyer by training, so I immediately thought to the beginning of my career, which came after the financial crisis of 2008-09. And if you look at what happened with the banks in 08-09, we actually had a concerted effort, a globally coordinated effort to add regulation on the banking industry, looking at things like derivatives and swaps and other instruments that had led to that financial crisis, arguably. And what we see 10, 15 years later is a more or less complete rehabilitation of the banking sector. We're seeing record profits being reported by banks. And I think most remarkably, the reputations of these institutions have been repaired almost entirely. So looking at that as a model, I've been thinking about the crypto industry, where it might go, what regulation, if and when it comes in the United States, might do to help crypto move forward, And I saw actually a number of catalysts on that front that I thought could potentially help move the markets forward on a horizon of, let's say, the next 1 to 3 years.
Speaking with CNBC Squawk Box recently, CFTC Chair Rostin Behnam argued that there is a gap in regulation and that Congress needs to step in and get over not wanting to legitimize the technology. What's your reaction to his statements?
I think it's a fair observation. We have been struggling in the United States with a particular attempt at regulating digital assets, and that is regulating them as traditional asset classes. So we've seen a lot of effort put into trying to figure out whether certain classes of digital assets are securities. We've seen efforts put into labeling them as commodities. These rule books and their requirements for market participants are very different, and not having that clarity has made it very hard for market participants to come in and confidently build in the space. And so I think to that extent there probably is some room for additional clarity. If you look at what other countries are doing, I'm thinking in this case of the EU in particular, they've adopted regulation that treats digital assets as digital assets, which is to say virtual asset service provider or crypto asset service provider type regulation. Right now in the United States, we haven't adopted legislation that would do that, and so we're still in this cycle of trying to figure out what these digital assets are and how they should be regulated.
Now, I want to focus on regulatory advancements for crypto in the U.S. this past year. Over the summer, for example, U.S. lawmakers advanced 2 landmark bills, the Stablecoin Bill and the Fit for the 21st Century Act, which establishes a crypto framework. So I'm wondering, what do you think of those 2 bills, and do you think they will actually become law? If so, what's a realistic timeline?
Yeah, in fact, when I talk about catalysts for the crypto market and I talk about the impact of regulation, I am thinking very specifically about things like the Stablecoin Bill. And just to focus on that bill in particular, there's a very good reason why we see this as very impactful potentially for the markets. So we've had earlier in the year interagency guidance to the banks telling them that certain kinds of activities in the crypto markets are potentially high risk, potentially too high risk for banks to engage in. If we have federal stablecoin legislation, we will in every likelihood have a mandate for banks to go out and, if they choose to do so, issue stablecoins. That means actively engage with digital assets in a way that I do not believe many of them would feel comfortable engaging today. And let's look at the point of stablecoins, right? These are instruments that are designed to retain their value, not fluctuate in value. They're perfect instruments for transacting in the internet. I would call them the currency of the internet in a sense, right? And so when you have banks, first of all, engaging with digital assets, you have banks and financial institutions coming into the space, and we believe banks are going to be major players. But then we have stablecoins circulating in commerce, being used to buy and sell instruments. And I believe that the people who are going to be buying and selling those instruments are everyday folks like you and us. And I think that's really great for adoption.
Do you think the regulatory advancements we have seen in the U.S. over the past year were enough, especially when compared to developments on the regulation front in regions around the world, including Singapore, Dubai, the EU, which you mentioned, and the UK?
I am concerned and have been concerned for some time that the U.S. is falling behind. I frame it in many senses in 2 ways, right? Digital assets are a national security issue, and I can get into why I believe that is. And I believe digital assets are an American competitiveness issue, and I mean competitive in terms of taking market share in the internet economy. And we are right now, and the internet economy doesn't care where you are, how big you are, what your legacy systems look like. It's a forward-looking economic pie. And so on the national security front, the United States has benefited both in terms of its treasury auctions, but also in terms of just global influence from being a leader, a thought leader in regulation, but also having dollar dominance, arguably, has been hugely helpful for the United States overall. I think when we have other countries issuing stablecoins that aren't denominated or backed by US dollars, we have a serious dollar hegemony issue, and that's a national security issue. And then again, I think there is economic activity that will be migrating to the internet. And I think if we want to have a piece of that pie, if we want to be dominant in that space as the United States, we have to be active and catch up to our friends around the world who are already looking at this space very closely and embracing it in a way that I think we've been a little bit reluctant to or cautious to so far. The good news is that it always takes the United States a long time to arrive at the right answer, but we always seem to do it. So I am very hopeful that we will do it in the coming years.
Allegrante also weighs in on Senator Elizabeth Warren's call to update the Bank Secrecy Act to include crypto, which she says is used for terrorist financing, drug deals, and by North Korea. You'll be able to check out that full interview at cnbc.com/cryptoworld. All right, that's it for this week. We'll be back again on Monday. Have a great weekend. We'll see you then.